Hi, Lee Phillips. Want to talk to you about alternative minimum taxes for 2 seconds. Trump basically blew a hole in alternative minimum taxes, which is good for you, because the alternative minimum tax was passed, 30 some odd years ago, to make sure that the rich paid their fair share. The problem was you didn't have to be that rich in 2017 in order to start to pay alternative minimum taxes. For example, if you made, as a married couple, $85,000, you were rich, and you had to have your taxes calculated under the alternative minimum tax rules. Basically what happened is they said, okay, you get to a certain point, and it's 85,000-ish, depends somewhat upon whether you're passive income, active income, a lot of factors, but basically the exemption was $84,500. So when you hit that level, then your taxes were calculated using an alternative method to make sure that you paid more taxes. And your tax dude didn't even bother to mention the alternative minimum tax to you because it was just expected that you were going to pay alternative minimum tax, which is a bite. But he just plugs your numbers in, kicks the numbers out, and that's what you pay. Well, Trump figured, okay, well, $85,000 for a married couple is not really rich. So he moved it up to $109,000 basically. When you hit $109,000, then you start to pay the alternative minimum tax. There was another trick that they used prior to the Trump tax laws, which said, okay, when you hit a certain amount, $160,000 basically, then anything over $160,000, if you made $20,000, if you made $180,000, that was $20,000 over the $160,000, we would take 25% of that amount, that $20,000, which is what, 25% of 20 is like $5,000, right? So you would take, and you wouldn't pay alternative minimum tax. It didn't kick in at $85,000 anymore. It kicked in at $80,000. So by the time you got up to basically $500,000, you were paying alternative minimum tax on every dime you made. Well, Trump really blew a hole in that because he moved it from not $160,000 to where it starts to phase out, is what they say. He moved it to $1 million. So you don't phase out until you reach $1 million, and then you go from $1 million to $1.5 million, basically. Had to check that. So you hit $1.5 million, then you're going to be paying alternative minimum tax on everything below $109,000 too. So the exemption amount, is what they call it, went up from basically 85 to 109, and then the phase out, which got you clear down to the bottom, the phase out didn't start not at 160, but at $1 million. So a lot of us didn't phase out too much at that point, $1 million to $1.5 million. So you're not nearly as worried about alternative minimum tax today anyway as you were in 2017 before the new tax laws took effect. The Tax Cuts and Jobs Act went into effect, or was signed anyway, on December 22nd, 2017, took effect January 1, 2018. There's a catch though. Unless Congress makes it permanent, and with the House being transferred over to the Democrats in 2019, they say they're going to take everything back. So I doubt it's going to be made permanent. They didn't have enough votes to pass it as a permanent tax cut. So most of the Trump Tax Act will disappear the last day of 2025. Not a good deal, guys. So for right now, you're not nearly as worried about the alternative minimum tax you can be a little richer and not have to have your taxes calculated using an alternative method.